Hi guys, this is Sammy here from Mex Sales and Lettings in Harborne, and as you know, I'm an estate agent and I love bringing in other property professionals and experts onto my channel, have a chat with them, go through things. Birmingham property market is smashing it right now. We've got some big hitters in the game. We've got Steve Hamilton, we've got Sad Hussein, we've got the Developers Network, which is Shane Trainer, and today I've got the one and only Sam Norris. He's smashing it on Instagram, and I'm glad to have him down in this room, have a chat with him and work out what the hell is going on in the property market. How you doing?
I'm good. That was an awesome introduction. As we were just saying, basically, if you're working in property right now, if your name doesn't begin with an S, you're basically going to fail, aren't you?
You're not involved.
Yeah, you're not involved at all.
The big S's.
The big S's, yeah, absolutely. No, it's awesome to be here, and I love chatting to people like yourself. We had a great conversation last week. Yeah. I think we could have just chatted all night, couldn't we?
We met at the Developers Network, didn't we?
We did, yeah, and Abdul introduced us. So Abdul isn't an S, but he's Shakur, so he's still got an S in there. So
he's allowed to.
He's part of the crew. Yeah, he's part of the team.
So listen, you work for a company called Grand. You own Grand Union.
I do own Grand Union Finance. I actually changed my LinkedIn to say managing director the other day.
Instead of what?
Instead of just director. I thought I deserved it. I thought
like people when they say like founder or co-founder.
Yes, but I did co-founder. I did have a business partner that I bought out, and it said on LinkedIn co-founder, and I was like, it's just me and him. Like, I was really sort of against like pushing the whole, we're bigger before we are. But I've got a team of 5 now, so I'm like, I can be a managing director, right?
That's good. I've always called myself MD. I've always stayed away from using co-founder on LinkedIn, Instagram. I don't really like that sort of style. I think it's a bit Americanified. Yeah. And I think keep it British, basically.
Yeah.
So you work in finance. It's not complicated what you do. You do mortgages, bridging finance, bridging loans, etc. But I guess why you're here is I want to know a bit more what is going on. Like, what is happening? Why is it happening? And I guess the big, elephant in the room is interest rates. Mm-hmm. That's the thing that's driving the stuff right now. So what's your opinion on what's going on?
Yeah, look, what I think there's a lot of confusion about interest rates, because interest rates are incredibly high for the last 10 to 15 years. We go back a bit further than that, not necessarily that high. But everyone's looking at it as a direct comparison to the Bank of England base rate. And they're going, well, the Bank of England base rate is 2.25. At the time of recording this, it's going to go up today. How much, we don't know. But a lot of people will see that and go, well, why am I paying 7% now for my buy-to-let mortgage, 2-year fixed rate or something like that? And it's not a direct correlation. This is what people need to understand. How lenders lend is based on what it's going to cost them to get money to lend you. There's very few mortgage lenders in the market that actually lend their own money. One of the big reasons why, back in the dark days of the credit crunch, the government had to bail out RBS is that RBS are one of the biggest interbanking lenders in the country. Mm-hmm. They lend out billions, and it trickles down the system, and other lenders lend it to other lenders, and that's our market. It's incredibly sophisticated and complicated, and how confident the market is or how stable the market is will influence the rates in which lenders lend money to each other. We call them swap rates. And that's effectively how we've got to where we are. When we had that terrible couple of days where the Bank of England raised their rate by 0.5.
When Trust came in?
It was after Trust. It was when we had the mini budget, or the disaster budget, as most people are calling it. Kamikaze.
We've backtracked now, haven't we?
Yeah, we've U-checked. Look, there was a couple of things in there that weren't necessarily bad policies, but I don't think they were presented in the right way. But effectively, what happened off the back of that was we had the two main institutions in this country, the government and the Bank of England, not in tune with one another about what they were trying to do to help the economy. What that sent was a clear message to the international community that the people in charge of the UK didn't know what they were doing. We had a mini run on the pound, went to the worst against the dollar it's ever been. Clear barometer of what the international community think of the UK is how strong is the pound doing. And it was just a knock-on effect from there. It made us look incredibly weak. And we had a point where the government was selling off gilts and bonds at the cheapest price they have done for ages, which again just shows what they value their own investment. Just sent a clear indication to everyone that everything was going to pot. And of course, what happened off the back of that, the swap rates went into huge fluctuation, and we actually had a 48-hour period where over 1,000 mortgage products were taken off the market. To give that some context, there are probably 1,000 mortgage products available currently in Italy, Spain, Germany, and France combined. Probably not even that many.
Why do we have so many?
Because we have the best lending market in the world.
Right.
We have the most sophisticated, most secure, and most diverse lending market in the world, bar none, which is incredible, and one of the reasons why we have such a strong property market, because everyone talks about supply and demand as a property market. The driver of supply and demand is lending, is availability of credit. Exactly. So we'll think about it.
Is that why like UK has a higher rate of home ownership than the rest of Europe?
Because
you have a better system for lending.
100%. So think about it. Back in the day, what you used to have was, during the feudal system, you'd have maybe 17 landowners in the whole country, and these were the lords of certain parts of the country. And what they would do is they would rent out their land to people, and they would work the land, and they would pay in potatoes or whatever it would be. And what then happened was, suddenly there was a market to borrow money in order to buy your own land to build your own house, or buy a house. That never existed before. As soon as that happened, suddenly home ownership became a reality for more people. And that's how this whole thing sort of matured. And we were one of the first countries in the world to adopt that kind of policy.
Every man's dream in England is to have their own home, isn't it?
Exactly, which, I mean, that's a whole different line of conversation as to whether or not that's the right thing or not. I personally don't think it should be the aspiration. There's various other things that you should aspire to. And I think the government push home ownership too much when it's not actually that important.
It's interesting you say that as a mortgage broker, as a lender.
Yeah.
Because like everyone strives to have that, but your opinion is like, it shouldn't really be the main driver. I guess that's why the media sort of use that against us, and the change in interest rates have like really scared and put fear into buyers and the banks as well. Yeah,
the government have created this feeling that everyone has a divine right to own a property. They don't. As we've just been talking about, it wasn't that long ago that probably less than 20 people owned property in the UK, the king or queen being one of them. And so there is no divine right. You have to earn the right. And I do get frustrated quite a lot when I speak to people and they're like, oh, it's really out of order that landlords are pushing us out of certain areas because they're taking over. No, landlords own something like 16 to 18% of property in the UK. It's a tiny amount. And then probably about the same amount is owned by social housing companies. The rest is in private home ownership. That is massive. It's the big, probably
60% it is,
it's over 60%.
Wow.
So when you get the likes of Keir Starmer saying, oh, I'm going to come in and I'm going to drive these landlords out. Well, who's that helping? No one. It's not going to make any difference at all. That's an appeasing policy to try and win votes. It has a negative
effect on renters anyway.
Of course.
Because the less rental properties available, it means the rent prices just go up, and then everyone moans about that.
Well, look, one of the things I do a lot, which I know I shouldn't, is engage with people on Twitter. There was a guy recently, and he goes, all landlords should be forced to give their property back for people to buy as residential homes. And my retort to that was, what about all the people that can't get a mortgage to buy a residential home? They'll go into social housing. Well, there's not enough social housing as it is now. So where do they live? The streets? So actually that doesn't solve the problem. What we actually need is less home ownership and more landlords, more rental properties. The government should be, and it's not...
They are at the moment helping a bit with build to rent.
Yes, they are.
Funds building thousands and thousands of flats in central Brum.
Yeah, well, there's that big one near Edgbaston, which is all build to rent.
Yeah, and the one was down by Mass House Plaza. They're building a 52-story building there with
which is good, because actually that's the problem that needs solving first. The housing crisis is not an ownership crisis for me anymore. It's actually just a home crisis, having somewhere to live. So over the next 24 months, there's going to be loads more people that need to go into social housing, and there's going to be loads more people that need to like downgrade to like maybe living in an HMO. If you think of it like that, because in a recession, what happens is everyone sort of just moves down the ladder. So people that were living in mansions will live in flats. People living in flats will go and move into HMOs. People that are living in HMOs might not even be able to afford that and are forced to go into social housing. We don't have enough social housing. We don't have a good enough rental, good enough lending market for people that want to rent their properties to a Serco or a housing association or something like that. So there are so many little micro problems that nobody talks about because it doesn't win votes, and that's the reality of our problem.
Doesn't it,
exactly, it goes back to the media, who clearly have a different agenda to most people. So
going back to the question, like the interest rates. So where do you see it in the short terms, i.e. before Christmas, and then like April when the financial year ends?
Mm-hmm.
Where do you see interest rates being for like a typical homeowner or a buy-to-let for like a landlord to buy a property?
So at the moment, we're on an average of around 6%, which is incredibly high considering where we were. Now, just on a side note on that, a lot of people are going, well, back when, Thatcher was around, it was 15%, this, that, and the other. Yeah, but properties were like 27p back then.
Yes,
And people were, in terms of the ratio of how much they were earning to the average price of the property, it was a lot closer. So 6%, 7%, 8%. I mean, if we went to a 9% average, the property market would die, because people just wouldn't be able to buy a property.
I ran my mortgage at 9% just to see what happened to my rate,
Yeah.
my repayment, and it's 5 times what I'm paying.
Exactly.
So
it's going to be. I mean, it's already unaffordable for a lot of people, which is why everyone's predicting lots of property coming back into the market over the next 24 months, because people will come off their fixed rates, realise that they can't refinance, so they have to sell their property, and some will put their head in the sand, and unfortunately they will get repossessed. The best thing to do is, if you cannot keep up your repayments on your mortgage, is to call your mortgage lender and tell them. They have a regulatory responsibility to help you. So that's the first thing to do in that situation. Where I think rates are going to go short term is the Rishi effect. We are starting to see the ripples of it, which is a good thing. Whether you like the Conservatives, whether you like Rishi, he represents more stability than what has previously come.
Yeah,
and I actually think, in hindsight, potentially Truss being in government might have even helped the stability even more, because anyone that was against Rishi in the Conservatives before is going to go.
Love him even more.
It's going, well, we tried the Truss method. That clearly didn't work. So we've got to put all our eggs in one basket with Rishi. Now we can't be swapping and changing anymore. We're already at the bottom.
It's like it was planned. Put it on terrible.
It is.
Dangle the solution here.
I mean, when you think about it, like almost you couldn't have written that script. So he's come in. There's more stability. It's like what I was talking about earlier on. The swap rates are all based on stability. We've seen the pound improve, not by any huge margin, but we've seen the pound improve. We've seen, gilts and bonds go up a little bit in price. We have U-turned on a lot of the stuff that the international community didn't like about our economic policy. Effectively, just so that people are aware, what that economic policy basically was we are going to max out our credit card, and we've got no plan of how we're going to make the minimum repayments. That's effectively the message that was sent out to the world, which is why everything happened the way that it was. We now are starting to get hints of what's going to be going on moving forward. Rishi quite rightly pushed back the budget from, I think it was going to be in the next couple of days, to the 17th of November. So what happens on the 17th of November, I think, will have a big impact as to what is going to happen with mortgage rates in the short term. If he comes out and sends a clear message of, we are going to repay our debts, and we have got a plan in place.
Have we ever been debt free though? Ever?
No, we don't, and we don't need to. We're one of the most in-debt countries in the world, but we both know as well as anyone, if you've got debt that you can manage, it doesn't matter.
Exactly.
So there's good debt and bad debt. We have debt that we are on the verge of not being able to manage, and Truss was essentially saying that's what our policy is going to be. Whereas that won't happen here. Now, what Rishi will probably come out, the man on the street, the woman on the street are not going to like what Rishi's going to have to say. There's going to be tax increases. There's going to be, policies put in place that are not going to benefit, the everyday person, the Joe or Josephine blogs. Mm-hmm. But they are going to benefit the market. They are going to benefit the economy. And I've gone on record a couple of times saying Rishi could actually save our economy and then get voted out of the next general election, because most people will not understand. They won't understand what he has had to do. I think he's already come to terms with that. I reckon he's gone, right, my job is to save the country. My job is to get us on the path to economic growth, knowing full well that it's going to be almost impossible to win that general election. And I'd like to think that what he's going is, I've got a clear job. My job is not to be the Prime Minister and be famous and all this kind of stuff. It's just to fix it, because I'm the money man and I know how to do it. So I think short term, back end of this year, moving into next year, we could see rate reductions, average rate reductions. I would love to be able to go back to a client right now and be able to recommend a buy-to-let mortgage that begins with a 4. I'd love to do that. I haven't been able to for a little while. I could see that happening. I think that's the best we can hope for, is something beginning with a 4. How it progresses over the next 12 months, I think the Bank of England will continue to increase the base rate. How that goes, they've said that they were going to continue doing it all year, which they have done. But clearly it is not enough just to raise the base rate to combat inflation, which is ultimately what we're trying to do. We've got a cost of living crisis. That is the most important thing. The property market is secondary to that. So if the property market is a bit sort of stagnant for a couple of years, that's not necessarily the worst thing in the world. We've got to sort out the cost of living crisis first. That's the main thing. So battling inflation is important. The problem is you keep raising the base rate too much, and people won't be spending money. And the way the economy grows is by people spending money. So you're making it very attractive, or more and more attractive, for people just to stick their money into savings accounts.
People aren't going to stick into savings accounts, really.
They are, though. They are, yeah.
It's 2%, 3%.
Yeah, but people have seen that as a comparison to 0.1%. I have a savings account just as like my rainy day fund with my bank, and up until not that long ago, like 6 months ago, it was like 0.2%. It is literally pointless. I'm losing money having it in there, but it's there as my
hedge. You need to open your app to check it.
Yeah, it does. But it's there as my rainy day fund. Everyone should have one of those. But now, if it's 2 or 3%, when you look at that as a comparison, people are going, that's free money, because we haven't had that for so long. For years. Yeah. So I think there's definitely good.
There's obviously investors there, yeah?
100%, yeah.
Do you not think investors could buy property now? There's obviously going to be a little bit of property cooling in the prices. We've noticed it already. I think there's going to be opportunities available over the next few months.
Cash is king. Cash is king. If you've got cash right now, I would be literally, it's like supermarket sweep next couple of years.
Do you reckon 15% drop could be predicted in certain bad areas?
Worst I've heard is 20. But the thing is, we were talking about this earlier, there are so many different, that people talk about the market. Well, the market is made up of so many different micro markets. You can't compare Chelsea and Kensington to Keswick. Do you know what I mean? You can't. So
let's get back to Birmingham.
Let's talk about so Birmingham's nice in the middle. Yeah.
Harbour to an area like Allen Rock. There's different values, and there's people with different job styles. And obviously, where we are at the moment in Harbour, in the last recession, the drop was nowhere near as much as the average in the whole of the UK because the typical buyer in this area is working at the hospital or the university, so they've got solid income, so they're going to be able to afford to buy. And there's still plenty of buyers looking still today.
Yeah.
I think the property prices in the whole of England will probably go about 10 to 15% drop, and in small, good economy areas, whereas micro economies, I think you get like 2, 3, 4% drops. That's probably a very positive view. That will help the buyers. That will hope to keep house prices at a decent level. We've got to look at landlords as well. Are landlords still going to buy when their mortgage rates are massive? Potentially.
Well, I would. If I was an investor, my focus over the next 12 months is building Grand Union. But even my eyes are being kind of diverted a little bit. You get shiny penny syndrome, which you need to be cautious of. But even I'm going, there's going to be so many opportunities over the next 24 months to buy property. There's going to be so many motivated sellers. As an investor, you're looking for motivated sellers. That's where you're going to get your deals, and there's going to be a lot of motivated sellers. Imagine you're on, you've done a BRR project or quite an extensive BRR project, and you're going in over the last couple of months, and you're coming out of it in April, and the property market's dipped by 5-10%. Mortgage rates have gone up, and you come to refinance and go, actually, this actually doesn't make any sense to refinance this anymore. Let's get rid. But they're on a bridging loan. They want to be selling that as quickly as possible, so they might take a 10% haircut on the open market value of the property then, just to get rid of it, and that's the opportunity. Yeah. So that's just one of 20, 30, 40 different types of opportunities that are going to come out of next year. Well, in terms of actually, so you can corroborate this. I heard that the average number of properties that were being sold or were on the market with any given estate agent back in April was around the 20 mark. It's now apparently the average is up to the 30 mark, and registered interested buyers are down. Would you say that's I would say right?
Your stock levels are building at the moment.
Yeah?
Yeah.
Okay.
Yeah, because you can't sell the stock you've got because there's lots of buyers out there.
Yeah. Okay.
And one of the biggest stock issues at the moment is apartments. Apartments, we've got like diminishing leases, high service charges. they're the ones that are impossible to sell right now. And we've had a lot of, over the last few months, we've had like one of our clients have like had their remortgage valuation come through for their new rate, and they're like, Sammy, we need to sell now. So we go, okay, we'll give it a shot, but I can warn you, it's not pretty to sell flats right now, especially second-hand, 10-year-old properties. So we go, we put the market for sale, 3-4 weeks in, one viewing, offers way below what they want, they go back on the rental market. I see the rental market being solid now for the next 12 to 18 months, because when people can't afford to buy, they're going to rent. When people can't afford to sell the property because it go too low, they rent their house out and they move to the area for where they're going for work, and they rent over there. The rental market is just going to stay solid, and as interest rates rise, landlords are essentially going to raise the rent, because they've got to offset the cost of the mortgage. So rents are only going to go up and up and up, and with the stock levels for rentals not good at the moment. It's just only one issue. It's just problems for tenants. But if you're looking to, as a landlord, if you're looking to buy property, it's a great time to buy a rental property, because the rents are just flying.
Well, you just said there. So that process of, if someone's living in their home, they get to the end of their fixed rate, let's say, and then they're suddenly like, Jesus, I am going to be paying 5 times, or 3, 4, 5 times what I'm meant to be. What I was paying previously, it's now completely unaffordable. I actually don't have the disposable income to do it. They try and sell, they can't. Then actually that process of moving out and actually renting, I think, is a really, really good one. Because but they need to, from a financial perspective, they need to just be aware of how that can work, because if they're refinancing, if they need to refinance at that time, they're going to be looking at something called a let to buy mortgage, which is you're letting your property to buy something else rather than buying to let it. But if they're moving into rented accommodation, there's a certain logistical pattern that they need to follow in order to do that. The first thing that they would need to do is get consent to let from their existing lender, and then they need to get that property on the market to rent. They need to get it ready to rent and get it on the market to rent. They then need to actually find where they're going to move into it, move all of their accounts, get on the electoral roll, all that kind of stuff. They need to have a potential tenant lined up. Only at that point can they actually start the application process to refinance onto a let to buy / buy to let mortgage. So a lot of people won't know that. So they'll get very panicky about, oh, well, what do I do now? There isn't actually a massive market for, so a lot of let to buy mortgages, they will expect you to buy something. So if you're not buying something, they won't lend to you. So a lot of people just think, oh, I'll just switch it onto a buy to let mortgage. It's not as straightforward as that. It really isn't. But for people that are struggling in that way, I think it's a cracking opportunity, because as we well know, the property market will come back, the mortgage market will come back. It only goes
up over the years.
And they move into rented accommodation. They're probably getting more rent than what they're paying rent over here. So then they are making a marginal profit. Then you need to be wary of like taxation and all that kind of stuff. So always need to speak to a tax specialist with regards to that. But in terms of a short-term measure to get yourself out of a bit of a pickle, I think it's quite a good one to do.
I think it's a good model. I think it will happen.
Yeah, I think it will.
People won't want to sell for a loss.
Yeah.
Not everyone is willing to take 25 grand loss. That's a huge, that could be someone's annual income for the year.
Exactly.
So they will rent, and that will they'll bring more rental properties in, and which will keep the rental market solid. MEX was started in 2009. During the last recession, I was working for another agency. They made me redundant because they couldn't afford me, and I just basically started my own company in rentals. And I've got the experience now. You look back then, what happened? Rents just went up and up, and where we are now is a sky high, and it's going to happen again because it's going to stay solid. It's
funny you talk about getting into it. So I got my first job in property, working for as a trainee broker at an estate agent in 2007. So 2007, 8, 9. For anyone that is watching this that doesn't know, was a pretty awful time to be in property. So you and I have basically gone through the credit crunch, Brexit, COVID, now this.
And the fee ban, landlord bashing for the last 5 years.
Oh
yeah,
was it the Osborne era?
And what has happened is it's just destroyed rent. Rent's just gone up and up.
Yeah.
Every time they try and fix something in the rental market, all they do is make it worse for tenants.
Yeah, The reason for that is because landlords have they're seen as these fat cat, like, don't give a crap about the tenants type people, but they are not. And I keep saying to people, like, I'm lucky, 97% of my clients are investors, and they're awesome. Like, these guys will go the levels that they go to, the extra mile that they go to produce a great home for somebody, and they genuinely care about what they do, and they like I had one recently. He's an HMO investor, and we were checking. We were doing a new remortgage for him, and we were just checking through bank statements and stuff. We always check through bank. And if there's anything on there that's just a bit dodgy, like we had one recently where someone had paid a lot of money to OnlyFans, I was like, mate, that's not going to look good. So
How does that look?
Yeah, not great.
You have to wipe it up.
Yeah, no. So I just
OnlyFans.
well, anything like that is seen as a potential addiction. Yeah. So anything that's gambling orientated can be. You can. I've been told. I haven't tried it myself.
Selling feet pics, they
say. Yeah. But there was I saw quite a lot of like Netflix bills on there, and what was that, and Disney Plus, and I was like, why? I said, why have you got so many Netflix and Disney Plus subscriptions? He's like, well, I've got one for every HMO. That's just part of what I do. I'm like, so hang on. So these people that move into a room, and I mean, I've seen the rooms. They're incredible, and they're bigger than the average. They're beautiful, but they also get a TV that has Netflix and Disney Plus. They're ready to rock as soon as they get in.
Cool.
I'm like, that's amazing, but that's what landlords do nowadays.
Yeah.
That's the level
Most
that they do.
landlords are majority not investors.
Yeah.
So we're dealing with people that are inexperienced. We need hand-holding service,
Mm-hmm.
and they want to know what's going on, every penny, what's been spent, why it's spent. They want to know everything, which is totally fine with us. And a lot of them are accidental landlords, so they've
Mm-hmm.
married someone and their house and is renting now, or they've inherited property. So we get that a lot.
Well, that's what that is genuinely what George Osborne's policies back in the day were actually trying to remove from the market. They were trying to make it less appetizing for somebody to own a couple of properties and be like an amateur landlord. At the same time, we actually had a mortgage market review, and one of the things that changed in that, with the Prudential Regulatory Authority coming in and changing a lot of the regulation to investment property mortgages and all that kind of stuff, was this idea of what a portfolio landlord actually was. If you own 4 or more properties, you're a portfolio landlord, and there are different sort of levels of due diligence that are done during an application process for those people, and a lot of lenders won't lend to those people because they have to do that extra due diligence. You don't get your high street lenders doing that. You know, your Coventry building societies and people like that don't lend to portfolio landlords. So, but we had the taxation changes, all that kind of stuff. It was all that, whether it was right, whether it was wrong, whether it had the effect that they were hoping for. You know, the 3%, the changes in whether the corporate taxation versus personal taxation of mortgage interest, all that kind of stuff. The purpose of it was to try and professionalize the investor industry. That's what they were trying to do, which actually is not a bad thing, because as you say, I think the majority of buy-to-let property in the UK is still owned by amateur investors. So what they're trying to do is they're trying to have a smaller number of landlords that own more properties. That's what they want, because if you do own 4 or more properties, you're more likely to be more professional about what you do, have more experience in doing it, utilize a management company to make sure that your tenants are looked after properly, and you know that you need a fire safety certificate and all this kind of stuff.
It was all there. All the legislation was there to sort of like make it more professional industry. But in my opinion, it just made rents more even higher.
Exactly.
A lot of landlords moved their properties to agents to help them out.
Yeah.
We could talk forever about this.
I know.
We get on pretty well. Yeah. I think the way I would like to wrap this up, for everyone is like, what your opinion is on a quick one.
Sorry.
On the property market in the next 12 months, and then I'll give you my opinion. What's your opinion?
I think prices have to drop.
Yeah.
The conditions of the market are such that it's not a growing market anymore. The supply and demand sort of deficit has shortened, so that will give rise to more stock being available to less buyers. So I'm not saying it's going to switch the other way around. It won't. Although mortgage rates are high, lending is still we have a lot of liquidity in this country, probably the most we've ever had. So there is money going out the door, not like the credit crunch. There's money going out the door that should stimulate people to want to still buy, but it is going to be harder for people to access that cash. So there's going to be less buyers, there's going to be more people wanting to sell, it's going to go down. That represents a huge opportunity for those that have cash in their pocket. If you have a portfolio right now, my clients are refinancing, pulling money out, ready to buy. Yeah.
As a letting agent, head on my head, as a letting agent, I think personally, rental market's going to go really high. I think it's going to be solid. There's going to be more tenants looking, and people who are looking to buy are going to stop looking to buy because the rate's too high, so they're going to rent. So rents are going to go up and up and up. I think the sales market, like you said, is going to go down unless someone comes in and like fixes mortgage rates at like say 3.5% across the board for resi and like 4.5% for buy to let. I think there's going to be a dip in property and there's going to be opportunities available.
Massively.
People just snap properties up. How's that worth at 150 now? Could go down to like 120. Great deals to be had, but the rents are going to be monstrous. So it'd be a good time to buy a buy to let.
Yeah. I think so.
That's my opinion. That's your opinion.
Yeah.
We'll see. We could do another video in 6 months and see if we're chatting nonsense or if what we said was right.
Absolutely. We'll do one of those of where we show this video and we go, told you so, told you this was going to happen. Yeah.
We did it. Sounds nice talking to you.
Pleasure as always, buddy.
Cheers.